Knee is working. That's good. Little run. Oklo picking up. Also knee, it's a 52-week high break, so I'm just gonna let this one run. Trail the 9. Anybody checking out arm or anything? I'm not liking this GE. 2 or 4 breaks, I'm out.
Markets are dumping.
close half of all my NNE long here to the 70s.
Tesla backloading.
Went Tesla short again. Anticipating the fashionable 18 SPY.
Waiting for N and E for a VWAP continuation. 39.50, give or take.
Yeah, could be a good trade.
GE back at VWAP.
Volume is increasing on GE.
GE VWAP continuation.
And Tesla's second chance was good. It should flush lower. 405, I think at least.
I guess GE doesn't want VWAP, bro. That's it, I'm out. All done with GE. 2 paper cuts and I'm out. Try the 9 EMA, didn't work. Try the VWAP, didn't work. On to the next. I'm trying knee for a VWAP continuation. Psst, psst, psst. I'm selling some of NNE into the test into 41 from VWAP.
I'd wait for delivery first and then buy. Chill, freezing everything up. I'm taking de-risking everything. Everything I hit.
Volume picking up in Oklo.
Nah, not anymore. This one doesn't. You drinking any more models? Not lower. Yesterday was my first green day for it. Yeah. Amazon. Yeah, right.
Oklo coming into high day.
But then he likes to go big and then yeah, like we'll get super big like 1 second before and that's sick.
Sold more of NE and NE into this 4150s. Let's see if we break high day. And selling Oklo to half of my position into 3670s. Well, 60 level for now. Drink water, man.
It's like my fourth one. Can you keep it up on real quick?
Arm?
Dude, it's right here. Where's it at? 165.
Are you shorting arm? Are you short arm?
No, I went long. I just covered at like 165.
165.
Yeah, I covered 165.
You long from where? Where do you long? Right here?
163.
The rubber band? Yeah, neat little run. is GE doing now? I should have flipped short after that. Need a strong hand? Need a man. You need a man hand. You know you when you tap it. What was that? Oh, you know when you tap it, like tomato sauce. When you're trying to open up tomato sauce, you give it a little tap, pop, 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 and then you seen those videos where like, and then they faint. Yo, I saw that shit happen at the gym last week, bro.
Wait, what?
Some guy was lifting hard and then just went. Brock.
Fucking ass. That's fucking crazy.
Like,
Yo, I wonder if any of them with their pants.
bro.
Are they fucking controlling their fucking bum? Holy shit, that's hilarious.
I'm running out of shares, man. Like, alright, was a good fashionably. Yeah, I think that's it. I'm done with Oakland. I think the move is done. Hmm? Fuck yeah. Shit. You'll have sizing in sizing small into that all close that y'all perfect. And watching it in the 5 and the 15 minute, bro. Allow me to withstand most of this. And then just letting it break out. Damn. Oh, let me get in touch with Roberto. Where's this kid?
Hey guys, can you hear me?
Yes, sir.
Is anyone in Miami office? I'm in Miami right now. Probably going to the office later today.
Yo, are you in the airport right now?
No, I'm in Miami Beach right now. At noon, I'm gonna go to meet Carlton and Christian in the office.
Hell yeah, dude.
Are you in Miami?
Nah, New York City. It
Which part?
just sounds super fucking loud. That's why I thought you were in the airport.
Oh no, I'm in the hotel. It's like a common area here.
Yo, how cold is it in Miami right now, bro?
It's not cold. It's just a little bit raining. It's like
Dude,
63 degrees.
you gonna visit New York City?
I am based in New York. I just came to Miami.
Oh shit, why don't
Yo,
you
he
come
was
to New York
in
City then?
Philippines last week, I think, right?
Yeah, I've been traveling for 2 months, but I'm back already. So, Alex, are you going to the office in Midtown?
I'm in New York City, bro. Can't help you in Miami.
Which area?
What are we? Midtown.
Oh, okay. I'm based in Gramercy, like East Village.
Dude, what the fuck? Let's hang out then.
Yeah, I will text you later.
Yeah, let me know when you get back to New York.
Okay.
Yeah, I might get out of this knee. Momentum slowing down. Yo, today would have been a great day if I just didn't trade fucking GE, bro. GE backside? What do you think? GE backside, what do you think?
Just
Look.
literally just said it would have been a great day if I didn't. Fuck. Take that as a fucking universe telling you, bro.
In a different market, this would have worked. That's all I know. didn't get into the end the down through open due to the spread. I'm not chasing. Waited for the 9, got in, it didn't work, stopped out. Tried VWAP, didn't work, stopped out. That's it, man. 2 trades gone. Yeah, this knee feels like it's gonna roll over now. Maybe break 70s. Well, 60s for sure. I don't know. Yo, didn't know? Isn't Trump signing something, or he's gonna say something that I think soon? Ay, 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 ay. Yo, what happened to my level 2? Oh, yeah. Yeah, I don't see anything else, man. GE, I'm gonna stay away from it. No volume. Alcoa look at Alcoa AA. AA. Alcohólicos Anónimos. See yesterday with the range that we're talking about? Zoom out pre-market. Oh, but it's not. Oh, yeah. And the 5 looks better though. So you get that break of pre-market, first move up, you short, and then just rip.
To the sunset.
Alright, I'll see you guys going to the meeting.
See you.
Yeah, I wanna go home, bro. Let's lay in my bed. So cold.
Recording in progress.
Oh, Jefferson.
relationship and like with the local bank. So that's how we wound up with what we got. But Dan was, I mean, he was, if we didn't have that relationship, he got us basically the exact same thing. Right. So without that quote unquote relationship. So he was awesome. Yeah. All right. Thank you. All right, guys. So as we always do with guests, you want to introduce yourself?
Yeah, I'm Tyler Sicko. I'm upstate New York and I'm 17 years old.
And Tyler, what are you doing here?
I'm learning how to trade, I guess.
Learning how to trade. So what brought you in?
My grandfather taught me investing when I was around 14.
Okay.
Kind of felt it was kind of a boring, just sitting there waiting for your money to grow over time. So then that's when around like 16 or 17, I got into what trading was and started to like it a lot.
Yeah. My grandmother got me into investing. And I remember she bought, this is when I was probably about the age that you started, maybe a little bit younger, and got me into investing. And she was like, you should buy Exxon stock. And I was like, why would I want to own some dirty ass gas station? It's literally what I said was, why would I want to own a gas station? That doesn't make sense to me. And that was that was my introduction into investing as a whole, was thinking about, well, why would I want to own something? And then I learned about stability in different companies and all that stuff. And then ultimately, like you, I recognized that I enjoy the pursuit of different sorts of opportunities, that I like playing games with edge, and investing is a game that over time, my view of it over time, it has edge because of the broader market, but trading is something that you actually have real edge in as it's developing. And so that's kind of a fun thing for me. Anyway, it makes me laugh thinking about that stuff. It's not what I do anymore. There is some, I do some investing on the side, but that's more of very, in line with kind of what we talked about with much higher time frame thinking, and that it has a totally different mindset. And I view that as a completely different business than my daily business is trading. And, this is what I'd love to do. So anyway, thanks for joining us today. You'll get a peek into what our 11 a.m. meeting is like. So what sort of market are we in? Let's start here. Starting at a yes, what sort of market are we in? Anybody?
In back to range.
We're in what?
We are back inside the range.
I would agree. We're sort of in a range. But certainly we're seeing a tape that up until about 11 o'clock, why was it low strength, low weakness? What happened? What started at 11 o'clock or is starting now? And actually kind of came out a little bit before, but was starting now. Yeah, Trump speaking. So
Trump.
Yeah. Trump speaking. And so anytime you have that, like you kind of have this idea of what can happen. And in particular, you want to be aware of a catalyst like this because it's very similar to FOMC. I mean, how important is Trump's speech out of 10 today?
8.
9.
I mean, we don't know, right? It could be a 7, or it could be a 4, or it could be an 8, or it could be a 9, or it could be a 10. It really could be anything. If I'm a big time trader, am I going to be putting on a lot of risk before I know that very unknown variable?
No.
Probably not.
You're probably going to be very careful with that stuff. So would that describe the price action that we saw prior to 11 o'clock? Yeah, very much so. Low strength, low weakness is what I would expect. Right? wouldn't there be, if I saw high strength or high weakness, with knowing this catalyst is coming out, wouldn't it be a very interesting market? There'd be something that would have to be like, wow, that's actually fascinating that that's occurring. It would feel like this might be a very opportunity-rich day. But if not, should you be very aggressive with opportunities or maybe even a little more passive than you usually are? So again, we're talking about setting the context of the day, but really what we're talking about is the way that you're preparing. You know, the two elements that are super important in trading is preparing for the opportunity and preparing yourself. Our best traders are studying the opportunities and the edges that are presented to them, but they're also being aware of the way that they're executing on those edges as they're being presented. And they're being very honest with themselves about how they're executing in those opportunities the way they're presented. And they're not blaming anybody else. They're not saying that market got me. They're taking full responsibility. And even if they made a mistake, they're saying, how could I not make this mistake again? And this is an important learning thing for anybody that's new here or anybody that's trading, is at the end of the day, or even throughout the day, as you're kind of doing your self-talk and ideally communicating with others in your community or in your team, you're talking through how you're feeling about the market opportunity. Do you think traders on our desk are saying, man, this market really sucks right now? What do you think? No? Why not?
Be more specific.
I'm not sure.
You don't know, actually. Okay, so you don't think they're saying it sucks. Okay, so that's something that you need to know. If you can take a stand on something, you have to know why you're taking a stand on it. Otherwise, you're just throwing out opinions. Do opinions help in trading?
No.
Not at all, right? So that's a very key lesson that everybody can learn. Traders on our desk broadly are not sitting around saying the market sucks. They're saying, I'm not seeing the follow through. They're saying, I'm not seeing the setups. They're saying price action, there's a lot of back and forth trading, so I have to make adjustments to my trading. Perhaps they're putting on 1/10 or 1/20th or even, you know, half of their normal risk that they would put on in really good, clear opportunities. So they're sizing down, but they're not sitting there and going, this sucks. They're sitting there and being, as I think Nathan said, a little more specific about what they're actually seeing. And even more importantly, they're doing a really good job of what? We talked about this yesterday. When you're starting to observe things that aren't really clear, what's something that you should be doing as you're doing that?
Reducing your risk.
Yes, but what else? There's something else that people are doing that very, very well right now. Scenario planning. Who said, somebody just said scenario planning, and that's exactly right. You're kind of doing, I want to see who, Nicholas, very well said. You're scenario planning or game planning. What's going to help you? What opportunities could be setting up? You're not being aggressive, but you're adjusting to those opportunities relatively quickly should they show up. So it's this really 3-step process that people are doing. The first step is they're identifying what's occurring in the market, identifying the sort of opportunities. The second step is identifying or communicating, ideally, not just identifying, but communicating how the opportunities are playing out right now. And the third step is preparing for when those opportunities change. In that second step, a part of identifying how those opportunities are playing out now, that's where the risk allocation is really coming in. The traders that are struggling the most right now, guess what the number one thing is that's causing the most struggles right now? And it's not necessarily trading related, but it's one of the keys that I've identified as something that I'd like to help everybody here do a better job of in 2025 because I've seen it have an immediate impact on people's trading. It's not necessarily trading related. Do you want to take a guess? No, you're hesitant to take a guess now. Okay, that's fine. It's not trading related. It's a skill that I don't even know if it's up on the board. I don't think it's up on the board. Need to put it on there. Being patient is appropriate, but the number one thing that traders that are struggling are not doing.
You're taking high EV trades.
It starts with a C. Starts with a C.
Collaborating.
Collaboration.
Consistency or
Watch the board. Watch the thing to see if somebody says it. Did anybody say it? You have to tell me.
Collaboration, someone said, looks like.
Collaboration. That's right. They are not collaborating. Why do you think that is such? I just wrote on the board, collaborate and risk allocation. These are my two goals for the desk for this year. No matter the market opportunity, if we, Bella said it yesterday in the playbook. Oh, that's hilarious. Okay. Collaborating, and what we mean by that, to be more specific, is you are sharing ideas with one or two other people, not collaborating with a giant team, not even going out and saying I need a mentor, not even doing anything else. You're collaborating with one or two other people. What that gives you is instant accountability. The traders that are struggling the most right now are not collaborating. They have lost the collaborative intent that they've set out with. Anybody know the what's that stat about the first week in? Is it the third week in January? What's up?
First at like January,
Like for the New Year's resolution, isn't it the third week in January? Like 90% of people are done with their New Year's resolution by the third week of January. Yeah, I should have looked up that stat. Quitters week, yeah. Quitters week. Quitters week, yeah. So we are in the third or potentially fourth week of January, and the people that set out to collaborate, that spent hours and hours poring over their yearly goals, saying, if I really work at this, I know collaboration will have a giant impact on my trading. We're into that quitters week, or maybe we're past it now. So, really, this is a reminder that you need to be collaborating. Collaborating, we created Discord specifically for collaboration. So you should be able to find two other people that will be willing to listen to your ideas. Thank you, Enrique, for finding that stat. 80% of people abandoned their New Year's resolution on the second Friday of January. So we're past that. That's a crazy stat, right? Think about all the energy that went into setting those New Year resolutions. Discord is a place where people can collaborate. All you need to do to collaborate is start sharing your ideas. That's it. Just posting your ideas. If no one wants to collaborate with you, just start posting your ideas, and other people will respond to them. Even if you don't have direct collaboration, just start posting your ideas, posting your reviews. I guarantee you people will find you. If not, I'll find you. So collaboration is the number one thing. Nathan said that's how I found a pod. You just started posting, right, Nathan?
Yeah, exactly. I found a pod that, you know, bunch of hungry guys. A lot of them are in prop now. But yeah, just posting on Twitter, posting my thoughts, my growth, my ideas, and we eventually found each other.
Yep. Yeah. Joseph said my pod found me from my posts. So if you have a goal of collaboration, maybe just start by posting. So anyway, the traders that are struggling most are not collaborating. They're struggling with collaboration, and the reason why they're doing that is because there's this negative spiral that happens. And I read an interesting book, I think I've quoted before, called The Slight Edge. Can't remember who the author is, but I actually had a lot of time on the week off, and in my spare time, I tend to listen to books. But there was a book called The Slight Edge that I re-listened to, and one of the things that's interesting is there's this graph that talks about if you are doing the right things, the edge will go like, let's say this is your baseline, right? If you're doing the right things, your edge will compound like this. If you're doing the wrong things, guess which way your edge goes? That. So the people that aren't collaborating kind of get into this negative spiral.
It's Jeff Olson.
Jeff Olson, thank you. They get into this negative spiral, and that's what's happening with a couple traders on the desk, and we're going to rope them back in pretty quick, but it's something that I'm seeing happening actually even more outside of the desk from people that I get daily report cards from and other things. So, you know, the lack of collaboration is a very negative spiral, particularly it gets covered up when market opportunities are very, very abundant. But as market opportunities kind of get to that point where we're setting up for the next big thing, and we don't quite know what the next big thing is yet, but when we're setting up for that next big thing, that's when the collaborative environment really shows up. It shows up in two ways. First of all, it shows up for the people that have been working really well in a collaborative environment. When the opportunity is really rich, they make significantly more money. They just trade better and all that stuff. When the opportunity environment is a little less rich and a little more specific, they tend to go draw down faster. So what winds up happening is their P&L curve looks like this. And that depends on the market environment. Market rich environments, they perform well. Market weak environments, they perform poorly. Or less market rich environments, or less opportunity rich environments, they perform more poorly. So all that being said, collaboration is an important thing. Please make sure you're doing it. That did not get into the market at all, and that's why we are all here to talk about the specific opportunities that were presented today. Let's go to SPY, please. I'm sorry for taking so much time. Next week, I promise we will get into the setups, and that'll be a really good thing. But for right now, I really wanted to make sure that we were appropriately teaching that concept and highlighting that concept. I felt like it was worth 10 minutes of all of our time. Okay? Please zoom out. Zoom out, zoom out, zoom out. Zoom out. What type of day are we having today? This is an important concept. What type of day are we having today?
Trending day.
A trending day. Okay.
A range bound day.
I would not agree with the trending day concept. I mean, technically you can argue that you are, but where are we within the range of yesterday?
Almost the middle,
Inside
above
of
the
the
middle.
We're inside, we're having an inside day currently, right? We're having an inside day. Is an inside day, by definition, high strength, low weakness, low strength, or I'm sorry, high weakness, low strength, or what?
Low strength, low weakness.
By definition, an inside day will be almost always low strength, low weakness. The only exception to that rule will be, and an inside day, for anybody that doesn't know, is essentially the entire range of today is inside the range of yesterday. So if you look at the daily candles, it's actually going to be a smaller range, right? So you couple, and I get it, it's technically like, I guess it is, but you had the overnight range that was a little bit outside of it. But You want to be very, very, very aware of the type of day that we're having. Is that the sort of day where you will expect really good follow through in either direction? No, not at all. All right, let's go to Q's. This one's a little interesting, isn't it? Because it is an inside day, but it's right at the low of the, I guess technically it's not an inside day, but it is still at the low of the range, which is so fascinating. Right? When you look at the divergence between SPY and Qs. And then let's go to IWM, please. And IWM is, after the gap down, now back into range. So I'm very interested to see what happens, but is this something where I feel like this is a market-rich opportunity environment? Not at all. Let's take a look at crypto because there was an interesting trade in crypto. Let's look at Bitcoin, please. So we had that little flush, and anybody know what that flush was from? So there's a senator who wants the U.S. to buy like 1 million Bitcoins or something like that. And then they were speaking at the Davos thing and didn't really say that or something. It was like a very weak catalyst, right? But given the setup, it was like, well, maybe this goes lower. And it did, but then immediately what happened? There were buyers there. So there really wasn't much to do in that case, right? It just kind of moved around and that was the end of it. So you want to be aware of the quality of a news catalyst. Is that a high? Yeah, Cynthia. Is that a high score catalyst? Is that a really, like, I would score that catalyst above a 8 out of 10?
Maybe 7.5.
Not really. It's not like she said we're not doing it. It just wasn't as strong, right? So I think it's probably like a 6 out of 10 or something like that. So it's you put that in the back of your mind. Okay. Let's get into the trades of the day, though. We've set the context for the day. And does this mean that all of us should not do our daily report cards today because it was a low opportunity? Does it mean you should not collaborate today because it was a low opportunity? Doesn't mean you shouldn't then go back and review some prior trades because it was low opportunity. Nathan Duran asked an amazing question yesterday. What was your question that you emailed me about the playbooks?
If we should study older opportunities during slow times, basically.
When you are waiting for bigger opportunities and the market is a little slower, that is the #1 time to go back through and learn about other opportunities. I actually had this amazing conversation yesterday with somebody that I know from the trading community, and we were kind of both talking about, kind of what we're seeing. And I try and talk with a decent amount of people on our desk, obviously, mostly, but then some other traders that I know. And we were talking about some of the opportunities that we see coming up potentially, right? And the conversation, as it naturally does when we're in a little more casual environment, turned to some of our best trades from last year and prior years. And we could almost feel the energy when we were talking about some of the best trades from last year. It was so much fun to think through the specifics of some of our best trades from last year. And he had very different ones than I did. Some of my best trades from last year were a little more straightforward. Kind of the big 3 from last year, big 4 from last year. With regard to SMCI, NVIDIA, MSTR, and then, kind of the other stuff. But, like some of those were my biggest trades from the year last year. His were a little bit different. He caught some of the longs that I really should have caught. And so it was really interesting to talk with him about it because we're reliving it as if it was happening now. And does that mean I go out and look for that next big trade right away? No. It just means I'm looking forward to it. And we were actually talking about some of the things that we would do differently had that opportunity occurred now. So some of the things that we would do that we learned, some of the things that we struggled with during that trade, I found it to be an amazingly powerful conversation. And, you know, maybe it's worth us having some of those conversations and recording them and sharing them for people to see, like, you know, what's your best trade. It's a lot of fun to talk about your best things, even in the times that it feels a little slower, because you're really going to find really cool things that you can remind yourself, oh yeah, I really need to remember that for next time. Really need to remember that for next time. So anyway, all right. Individual opportunities for the day, please. What do we have as individual opportunities for the day? Anybody posted in there? I tried AAL. I can talk about that. Been warming up outside.
It's 18 degrees.
It's so cold. It's so cold.
Yeah, it's I don't know what to say.
Yeah. So AAL, we had this very interesting opening range that's sort of set up. The problem with this is it's in the middle of the range, So it was a gap down into support, but it's kind of, you know, and that was the setup and the opportunity. Catalyst was decidedly somewhat negative. You can see on the call they started to buy it. It did have a little sell off. That 17 number was interesting. It just didn't go lower. So that was a very interesting one. Why I wanted to start with this is it would be very interesting if this gets above 1720. And it would also potentially set up a trade that we saw a lot of last year, which was starting at a specific time, we would see an uptrend develop, and that uptrend would sustain through the afternoon, particularly on gap downs into key support areas, which this is having. So that would offer a very good day two. And I remember, Caleb, you had a really good day two trade. I believe it was you. Somebody had a really good day two trade by making that exact trade. Can you talk through that exact trade? If it wasn't you, sorry for putting you on the spot.
Which
The day two where you get that uptrend from day one. You know what I'm talking about? Must not have been you.
like basically the bottom that's put in the midday, and
Yes.
then you get the trend forming from that midday for that continuation into that day two.
Yep, you have a clear uptrend with a clear buyer. And then you have that day two, you get a classic day two with a very strong move. So that is something that we can be paying attention to in AAL potentially tomorrow.
Like you're saying in the classic day two first move down into that trend.
Usually, yep. Yep. So that's something to watch for tomorrow. We wanted to highlight that because it's something to watch for tomorrow. Let's talk about RGTI, please. RGTI moved right up into potential resistance. Now it's just ranging. It's tough. Oklo, OKLO. OKLO, really good hitchhiker. Why is it such a good version of a hitchhiker? We'll do GE opening range break next. Thank you. Why is this such a good version? Because it is. This entire consolidation is occurring above the highs. Remember, that's a giant check in your favor. When the price action is consolidating above the prior highs, that is a huge, huge check in your favor. Let's zoom into the intraday price action, please.
Big dog.
Perfect. Yeah, it's sort of a big dog. You can definitely call it a big dog, given the time of day. What is one characteristic that is another check in your favor? Yes, the volume. Yes, the increase in volume on the break is another giant check in your favor. So you see how the volume, the minute bars are increasing on that break. That is another check in your favor.
One more thing, 52-week highs.
Yeah, I mean, we kind of covered that, right? Like the break and hold above the highs. Yeah. So these are two very distinct checks in your favor. What is another thing that can help you identify Oklo? What are other names in this sector?
NNE
NNE. What was NNE doing?
breaking out of
The same.
highs.
Very,
All-time highs, I believe.
very, very similar. So we've talked about this a lot. When you have a sector or a group of stocks, how do you make sure that you don't lose sight of that group of stocks? Nathan, what do you do when you have a group of stocks?
I usually just put them all on a watch list, on a single watch list, and scroll through them.
Correct. So if you're like, if you get an alert for NNE, all of a sudden you have all these other names that are similar on a very short watch list. Oklo could be one that you pull up and you're like, wow, Oklo's looking really, really good. I can actually take that trade. I recognize it. NNE is looking really, really good. I can actually take that trade and recognize it. What are the other names that are here? What are the other names? We'll make this list really quickly for people.
SMR.
SMR, yes. What else?
I think LTBR might be a nuclear. I'm not too sure.
EG and VST.
LTBR. What else?
Say it again, John.
VST.
B or V?
V as in Victor.
V as in Victor. Thank you. VST. There we go. So now we have what? 5 names? And you want to really focus on the names that are liquid. So we have 5 names in a list. Very easily you can, I used to keep a sticky note of the names that I would watch and write it down because for some reason I learned better if I just like write the sticky note and then post it in a watch list. But everybody has now this sector on watch. And so when you get a price alert or when you get something that pops up, you can say, wow, this entire group is running. Is that a check in your favor or a check against for the trade? What do you think? Check in your favor or check against when you have the whole trade, whole sector doing the same thing?
Definitely in favor.
Yeah, definitely in favor, right? A definite check in your favor. Are you more likely to get big dogs or hitchhikers at work if you have that check in your favor?
Yeah.
Are you likely to get big dogs or hitchhikers at work if you get a consolidation above the highs?
Yeah.
Are you more likely to get hitchhikers and big dogs at work if you have increasing volume on the break?
Yep.
So all of this stuff, it might be that, listen, we're trading a little bit smaller, we're trading a little bit more carefully, but when you get those checks in your favor, are you still going to take that trade?
Hell yeah.
Yep. The key right now is to be collaborating, because if you are collaborating, if you have 3 sets of eyes watching things, is it likely that one of those 3 sets of eyes would see something like that opportunity we just saw? And let's go into the exits for that. Okay, let's go into Oklo, please. What would your reason to sell be on this? Let's zoom into the price action, please. What's your reason to sell here? Your entry is clear on that break above 36, right before 10:30. What's your reason to sell?
Trend break.
Loss of the
Trend
9
break.
EMA.
What's up?
A loss of the 9 EMA.
I don't really love the loss of the 9 EMA because it's a trending trade, right?
Fair enough. If you're taking the momentum off the
If you're
open.
taking the momentum, once you lose the 9 EMA, a close below the 9 EMA makes sense. But do we ever get real acceleration to the upside?
No.
We don't really. And have we put in a lower high or a lower low since that break?
We have not.
So it's really tough to say there's a really good reason to sell yet.
I will say losing the 38.
Losing the what?
Losing
The 38.
38? You're saying like if coming into, if we would lose 38?
Yeah, we have to.
Well, if we drop 38,
That
then
would be
yeah,
the break of
obviously
the
you would have a
trend.
lower low. So it'd be breaking trend, right? If it stuffs 40 right here, that could be, technically a slightly higher high, but not really. You want to be very careful because why you can be a little bit smaller is because when trades work this well, you can just hold them for longer, right? Maybe you're giving a B risk, even though it's kind of an A minus or an A even. I would say it's kind of an A minus because it doesn't have a sector specific catalyst, does it? It doesn't have an individual named catalyst, does it? So it's sort of like it's giving us all the other checks, but it doesn't have an individual named catalyst. I would have loved an individual catalyst in this. And we didn't get it, and that's okay. And then taking it another step lower from an A minus to like probably a B plus, maybe a solid B. It's just something that you have to be aware of, mainly because the market environment's kind of that. You can counteract that with the setup, but I would give the opportunity score like a solid B plus overall. Does that make sense? And then the trade itself, what would I score it?
Make an 8.
What would that equate to? B, A?
B.
B plus.
Why would it only be a B? The trade itself. The big dog consolidation at 10:30. Why is that only a B? Remember, the opportunity is dictated by the market. The trade itself is more the intraday price action. If I tell you I have an hour, almost 40-minute consolidation above a prior high with elevated RVOL, what sort of opportunity would that be? Or what sort of trade would that be?
I think closer to an A. A grade.
I think it's an A, right? So if I've got a B plus and an A, can I still put on a decent amount of risk?
Yes.
Maybe I'm not putting on 50% of my stuff, but that's a solid. Somebody want to pull up what that math would be? I can't remember off the top of my head. Off that sheet that we shared. What percent of your stop should you probably risk in that? B plus setup with an A trade.
Like B plus setup for a trade like 20%, 25% max. Yeah.
20% of your daily stop? Is it worth putting 20% of your daily stop in that?
I think closer to 30.
You think closer to 30?
Yeah.
Well, this is where you need to be careful, because what if it's an A plus version? What if it's an A plus opportunity with an A plus trade? How much of your stop would you put in there?
100.
80%, right?
Yeah, 80.
Damn.
From
So
80 to
what's the difference between 30% and 80% in multiples?
50. Oh,
2.5.
2.5. What's the difference between 20% and 80% in multiples?
4.
That's where you have to really be careful and guard yourself against oversizing in things that are a little less. Does that make sense? Because you need that skew to work in your favor. So you don't really want, and I know we're getting into the two things that I want to talk about, and I'm sure it's not what everyone talks about, but I think risk allocation is really important here. I think you want to be very careful to risk 30% of your daily stop here, because the reality is it's not as big a skew as 20% of your daily stop is. Does that make sense? Think about the skew as your bet with your bet sizing. So these are important things to study and be aware of. Putting 2 to 3 trades in multiple stocks doing the same thing would change the percentages, right? Only if you allow it to change the percentages. If you're like, I have Oklo and NEE and I have all these other ones, you do want to think about that from the perspective of you all of a sudden don't want to be risking 100% of your stop, because then what are you doing? It's a good question though. What are you doing if you're doing that? I mean, it's essentially the same idea, right?
If the sector goes down, everything goes down. Therefore, everything's going to come against you.
Yep, at the same point, you could easily be stopped out. You are likely, yeah, your bet sizing is probably a little bit too aggressive there. So if you're spreading your risk out against different stocks, you want to think about all the risk you're taking as that. So does that make sense?
So Jeff, I have a quick question about this. So you're talking about less percentage, but in terms of if you're betting on one stock or if you're betting on 2 or 3 maybe. So if you're betting on 2, 3 stocks, you're at the same time on 2 or 3 trades. Yeah, you're not put 30% risk on each trade. So you basically mean like you're in 2 names, you're putting 10% each. So totally you have 20% risk on the sector of the
on the idea, right? On the opportunity.
Yeah.
Yep.
Yeah, that makes perfect sense. Thank you.
You're diversifying it.
And just one question.
Go ahead.
What do you mean by check for the skew in your favor? What do you mean by that?
Skew, yeah. So skew, I view as the skew being equated to exponential bet sizing. There's a conversation around exponential bet sizing. And I understand if you're new here, this is a very advanced conversation. I promise you over the time, we will really get going. And you will very easily pick this up, okay? But, and William Wheeler, great trade in J&J. Let's take a look at J&J. And then we'll come back to this. Okay, J&J. Okay, yep. Really nice day 2. This is exactly, if you want to see an example of that day 2.
This is the trend.
That is it. Thank you. That is perfect. That is exactly what it is.
Yep.
That is exactly what that day 2 looks like. So if you want to look at what AAL is doing to what this did, you see that pull in right to the trend line and then that buy. That's exactly what it is. All right.
Yep.
So good example. Thank you for calling that out. Let's go back to Oklo, please, so we can talk about the skew. Sorry for getting off topic, but let's bring it back to the skew and we'll close the week with that for these meetings. Okay. So the skew is what is the amount that you're betting on an A+ opportunity relative and an A+ trade, right? So let's say on an A+ opportunity and A+ trade, I'll bet 80% of my daily stop, right? If on a B+ opportunity, but an A trade, I'm betting 30% of my daily stop, your skew is 2.5, right? Is that, see, to make it simple, let's go A opportunity, A trade. So A+ is 80%. What is AA? What do you think you would bet on an AA?
70 to 80%.
I'll have to look at what the numbers were, but my bet would be you're probably 40% of your daily stop on an AA. So what's the skew there? It's 2, right? An A plus is twice the size that you would bet for an AA. Right? Let's go to BB. What do you think you would bet on a BB? Maybe 15, right? If it's a really good BB, probably closer to 10. So like, let's sit there with it. Let's just call it a 10 for easy math. So what's the skew from a BB to an A plus? Thank you for a BB at 10% to an A plus at 80%. Eight. That's correct. That's the way I have it. The difference between a BB and an A plus is 8 times your betting size. Whoever called the failure at 40, really nice job. I would be out of this Oklo by now. An 8-to-1 skew, right? That is an astounding stat to think about. I'm betting 8 times as much in an A plus as I am in a BB. B opportunity, B trade, A plus opportunity, A plus trade. That's an astounding thing to think about, isn't it? We have it written on the board that baseline plus A plus equals career. Right? Baseline, B trades are your baseline. B trades are what most of us take, and you have to be very good at your B trades. You have to be very, very good at your B trades. And for most of us, especially starting out, pretty much everything we take is actually B trades. Occasionally you get an A trade, but most of the time it's B trades. This would be, everybody can look at Oklo and go, this isn't a BB, this is like a BA or something like that, right? Like it seems obvious to all of us that this is more than a BB, right? This Oklo big dog long. Everybody can look at this and go, this is better than a B trade, right? So this is one where you're more excited, so you'll bet a little bit more, right? This would still be considered your baseline. This is still where you build your skills as a trader. Where you get to test your skills as a trader is in A plus opportunities, which we don't get more than maybe in a good year, 15 A plus opportunities, in a normal year, 8 to 10, right? Those are the ones that you are building up for, and then you really enhance your P&L significantly by executing on those. But you have to be really good at your baseline trades. And that's what we get the opportunity to work on every day, is our baseline trades. Taking all of this into a big step back. Taking all of this and stepping back, what are we really talking about? And how can you supercharge your learning of these? Roman, how do you think you could answer that question? Could someone please share how to identify correct group for certain trade opportunities, like A plus, A, B? It's what we talked about the other traders doing. Yes, thank you, collaboration. If you're collaborating, that is how we see our traders doing it better. Is literally they're just talking about it with each other. That's it. They're talking to each other about it all the time. They're coming up with the opportunity and the trade. As Enrique said, Catalyst, setup, trade, we're revising that. So Catalyst and setup go into the opportunity score, and then the trade gets its own score, right? For those of you using the Scalp Radar, you're looking at the Catalyst and the setup as as the opportunity, and you're scoring that, and then the trade gets its own score. right? There is not really a direct link to get it faster. The fastest growth I've ever seen with this is by people just talking about it. In the reviews, they're posting, I think this was an A, B. I think it was an A opportunity with a B trade. The process to use on this, if you're still needing to take a step further back, is you find the absolute best version of that opportunity and the absolute best version of that trade. That is your A+, A+. And then you find the worst version and the worst version of the opportunity, right? There will be lots of measurement rules as we go, right? And that's something where I don't know that we formalized it, but guess what? Next week is setup week. And so as we're going to setup week, we will be talking about how these different opportunities get graded. All right, so maybe your question's good for next week because it does depend on the trade a little bit, but we'll talk about that. Krykos, I don't know if I'm saying your name appropriately, and I apologize if I am not. Posted something about the risk skew being too high.
Yes, I will delete them. I will delete them.
I will say that although it seems to be too high, that's the reality of what we see on the desk, right? That is absolutely the reality of what we see on the desk from the skew. Anybody a part of the desk wants to feel differently? Nathan, is that the skew you tend to see?
Yeah, that's about that. Yeah.
Caleb, is that the skew you tend to see?
Yeah. You're not, what's it called for the, like, it's the 80% for, those are like the black swans. How many times a year do they happen? They're not much. And the difference of the BB or AA, like you're going to have, as you're decreasing or going down in the grade, you're going to have more and more of those that are setting up. So I think when you were saying that in terms of like the AA compared to A+, I was looking at 40 to 50%. And then I think B, like that's where you start getting into that like 15 to 20% range.
So I'll work on this and maybe a little over the weekend or a little overnight or something, and we'll figure it out. But that skew is really, really big. So okay, all right, we'll wrap it there. I apologize for taking so much time in the meeting today, but thank you very much. Next week we start setup week, so we'll methodically go through different setups and try and show examples of those. Okay. All right, talk with everybody later. Bye. Thanks.
Thank you.
We'll do a catalyst week some other time. Yep. See ya. Bye.
Thank you.
Take care, you guys.
I'll just go for a walk with you though. Get some fresh air. Go right now. Get my shit together.
Where you guys going? What's up?
What up?
Oh, I was like, I'm hurt. No, I was listening to me. And then I turned on and I was like, who's talking to me? There's no one here. You guys leaving now? Let's go. Go for a walk. gone, bro. How you do that? Okay, not bad, not bad. Check out him X. Scotia, what the fuck? Yo, what a pussy, bro. I just want to kill a girl. No, I'm still waiting for this. 12? That's what the email said. Bro, I need to go for a walk. I'm done. I'm not placing any more trades, bro. Mm-hmm. That'll be my game plan. Come on. Wait for my hitchhikers. 90 a night. Hit them. Reset. That's it. I was gonna say finally, but they're ass. Yo, Nini had another VWAP. And second VO continuation. Shit is strong, bro. 42 to 44. Yeah. Oh yeah, and I'm sorry. I got involved with that hitchhiker. Well, the 9, and then the VWAP continuation. The first one. Yeah. Thank you, bro. My mistake was adding, good thing I didn't add them both, but I added them out close. Yeah, like near 40. When it was trying to break above 40, that's where I added. And then I closed it once it broke like the 9 and the 5 minute. I'm like, yeah, that's it, I'm done with this. I gave back some P&Ls, so I'm like, nah, I'm not doing that anymore. I gave back like 100. That should move fast. Look, I didn't know we could add from them. Look, now there's ads. S&B ads. Yeah. 1 and then 2. I'm trying to watch my news, bro. Yo, this football this Sunday. close to the Super Bowl? What are they like? What game is it? Playoffs? Oh, Buffalo. Oh, you're a Buffalo fan, right? Oh yeah, Bills. One of my closest friends went to Buffalo University. Yeah. Yo, I'm gonna bring my chanclas for now, bro. My sandals. Cause I've been wearing sneakers, but I'm like, yo, my feet get too cold. I'm like, nah, I'd rather just wear my boots, cause these boots are kind of warm.
Not
Recording
necessarily
in
tweets from his
progress.
meeting at the World Forum, kind of moving the markets. And this is why I hate having meetings during the daytime and midday. Really hate that in itself because, you know, in itself, I have a few things that I have to do as far as, you know, trading, managing risk. So again, during the midday sessions, a little bit tougher. Again, due to the holiday on Monday for the inauguration, also on MLK, again, markets were closed, so I couldn't hold the meeting on Monday. So we'll be back to our normal schedule on this upcoming Monday in itself. And let me see here, make sure I'm sharing my screen. Screen one. So let's see who we have here. That's in the chat. Again, Ari, Kevin, Lakeisha, Justin, Nate, what's going on? Nate, waiting for you in April, man. Need to get down to Miami, over from the West Coast. Thomas, Muad, Neil, Jeremy, Joe, Oliver, Darius, Audrey, Neil, Moses, Giuseppe, Suzanne, Anderson, Darius, okay. Ankit, okay, Tyler, Enrique, and Jeff and Deanna, Yuri. Okay, George, David, Ethan. All right, anyone logging in for the first time? Is anyone logging in for the first time? Okay, Tim, Muad, Anki, Giuseppe. Again, to kick off the year, I had the goalie yearly goals template that I came out with, and we discussed and went over in detail, and then also the yearly review, which were the two prior meetings. I felt that to start off the year, those were the most important things to focus on before we focused on just like reviewing the best trade. I think we need to focus on process, because for any goals that we're setting for ourselves each year, each day, each week, each month, we have to focus on the processes that we need to that we have to put the processes in place to achieve the goals that we want. So that's most important. So again, for anyone that's logging in for the first time, I would urge you to go back and watch the archive of meetings that I've had from last March, I believe somewhere around there. So almost nearing a year, either March or April, somewhere around there. Just to see the flow of the regular meetings, how everything goes, the different topics we talk about, possible, the indicators that I use. So I think that's super, super important for anyone that's logging in for the first time to do. And then also formally introducing myself. Again, I've been with the firm since 2009. I'm a trader here. Also manage the risk for the entire desk for all of our offices. And I also run the office in Miami. So again, I do wear a lot of hats. So it's important for me that I really focus on these easy money setups. And this is something that's near and dear to my heart, because I really want to find like the best setups that are out there in the market, very easy to replicate, put on, and pretty much just lay up trades that, pad, the day-to-day as far as P&L and things, to really look at. So that's George. This is Thinkorswim. Okay. And then also the goal of these meetings are to, to review these easy money trades. As again, I refer to easy money as pretty much lay up, very just basic, trade setups that are very simple, require very little mental IQ to put them on, because sometimes, again, you have certain trades that are a little bit more challenging to put on than others. I'm just looking for very easy trades, because at the end of the day, the money hits our bank account the same way as it would for an easy trade compared to a difficult trade. So, again, these are things I just really want to point out and talk to everyone about in these meetings and really focus on in itself. And Giuseppe, I wanted to get your opinion on a trade I made in future on January 17th. I considered a second day. Giuseppe, since I'm tight on time for today, I will try to get to it. I can't necessarily do that in itself, Giuseppe. What I'll do, I'll try to get to it, but again, we're super tight on time. So I want to try to push through as much as possible and try to get back to it. So Giuseppe, at the end, if you can just please try to bring it up, just remind me, and I'll definitely try to get to it. It's super jammed today, and also I really don't like to have the meetings intraday in itself. So, first things first here, that I want to go through is that as far as the economic numbers for this week, again, it is Thursday. We're pretty much through the most of the week. But for anyone that is logging in for the first time, I just wanted to share with you, this is the website I use. I have no affiliation with them. You can use any site that you want to as far as looking up the economic numbers for the week. But I use forexfactory.com. I go to the calendar and I always filter down. Right here, I'm showing by expected impact by red, which is most important, and showing the currency here is USD. Because this is pretty much all I'm looking at, unless there's something important that may be going on in the Chinese market or a different market, European market, somewhere there. But primarily focused on these in itself. And I again look at this each week for the upcoming week. So again, usually by the Friday or the weekend, I'm already looking at this for the next upcoming week, or even already for next week. I've already looked at important events that we have to get to next week, which will be a Fed meeting. Everyone aware of that we have a Fed meeting next week? Everyone aware of that? Yes. Okay. Perfect. So I think that's going to be big. And then also, which is so important now, again, to focus on headlines, because Trump was just in the World Forum. he was just mentioned that he wants rates lower now. On top of oil prices lower, but he wants rates lower now. And it's super important that we have the Fed coming up. So gonna continue to keep close eyes on that, see what news rolls out there as far as headlines or anything else. But I think FOMC for next week is gonna be important. And reason why does everyone think that just the FOMC meetings are gonna be important this year? Just give me other than the fact that they have to cut. But what do you think is gonna be important here? Just wanted to get a guess. What do you think is gonna be important for the Fed from this year, for the meetings this year? Okay. So if their plan changes, Joe, you're right on top of it. So one of the big things is we're looking at probably, they were saying somewhere around 2 rate cuts for the year. So what if now that it's not 2 rate cuts for the year? What if it's 4 rate cuts for the year? What if it's 5 rate cuts for the year? So these are things that you definitely want to pay attention to see if the market can pivot. All right. And then also a key thing there that we want to pay attention to is possibly higher inflation. So then again, these are things that you want to definitely pay attention to in this type of market in itself. So super important there. So again, we have the Fed meeting. We have, of course, the new president, as we just spoke about, and everything else I want everyone to do as far as exercise. Make sure you're prepped for breaking news or to receive headlines. I would make sure I'm piped into all social media news sources from X to Truth Social. That's super important. Any handles that are important to follow as far as for breaking news that breaks headlines on news. So again, I think there's going to be a lot of news flow that's coming out, especially with so many executive orders that we've seen. I think it's a record amount that we've seen in such a short period of time. So, really, really important to be piped into news as a theme for itself. Next, we're going to pivot to, again, I'm trying to move through as fast as possible. Usually spend some more time on some of these and ideas. But again, I want to try to get through all the material for today. Next, another site that I use is Earnings Whisper, but I cheat. This is the cheat code. And instead of going to their actual website, again, I go to their X page. The reason why I go to the X page is every Friday they post the earnings for the upcoming week. And again, I don't have to log in or go to the website. I just go to X and they post it right here. And these are usually the major earnings reports for the upcoming week. So every Friday for the upcoming week, they'll post all the important earnings for the week. And for this week, as you know, of course, we had on Tuesday after the close, we had Netflix, we had UAL, Capital COF, which is also a pretty strong stock right now in itself. On Wednesday, we had J&J, HAL, and GEV. Also on top of that, after the close on Wednesday, that was the official kickoff for earnings season. I know we had the banks kicking off as far as with their earnings last week, but the official kickoff for earnings season is Alcoa, and that was on Wednesday after the close, or yesterday after the close. For today, we had GE, AAL, ALK, UNP, and after close, we have TXN, ISRG, and CSX. And also, just for mention for today, I was in for the morning meeting this morning. I held the morning meeting for Steve this morning. We did talk about GE. I said to look out for a possible pull-in or a quick flush on the open in the morning, and we did get that for anyone that was in on the morning call this one. Is anyone in on the morning call today? Just wanted to see there. Was anyone in with the morning call? Yep. Okay. Perfect. So I think, again, if you're not joining the morning call, I think what you can do is start to join the morning meetings that Steve holds throughout the week. And Thursdays, I'm guest there, and I'll host the meetings from itself. So again, definitely something you want to do if you're trying to get some good ideas in front of you, some names to keep an eye on and watch. I think it's super important there. Next thing that's on the list, Friday, we have Verizon and AXP, keeping those on the list. Okay. And so again, we're gonna really start to pick up next week when we get some more names. We get like Apple, we get Tesla, things of that nature. So I think next week is where we're really gonna see it start to pick up, and that will be the week of the 27th. Starting next Monday, we'll start to see, as far as the earnings names really start to pick up and the ramp up there. So super important to keep an eye on that. So do here. Okay. Right, perfect. Okay, and you guys, is everyone seeing the chart? I just want to make sure. Okay, perfect. All right, so chart review, and this is something I knew that I added to the inside, my meeting that I hold as far as the easy money. But I wanted to do a review as far as, stocks to just keep on your watch list and radar. And then E, again, this was a stock that I had on my radar previous to the election. Really so upset at myself. I was super and if we didn't pay attention. About that. I guess is something part of I'm talking about is not energy that we have, and we so big also energy that help and a nuclear name like this with this chart and not paint on those balls. So again, enough of that. But this is a like here. This being a side, so start to get really comfortable in itself, and probably somewhere RSI of like 90 and above. That's where we really start to get interesting there. Stocks are getting vertical. Also keeping this on watch, GLW. In itself, this is something that's just had a recent breakout and super strong. Corning in itself, so that's a good one to keep an eye on. Consolidations, Fannie Mae. This one is just consolidating here after it's a breakout, and we'll actually talk about Fannie Mae today in one of the stocks we'll review for the easy money into the breakout to the upside. So again, something consolidating here. And those for you watching, we're holding that there is strength, under strength, and being lower. I mean, that's here with 5 even use this through all day. So again to gauge more strength upside is trending. I was there, and again, definitely have to be Bitcoin ETF consolidating. Keep an eye on that. We broke yesterday, and then again, breakout and here having a move made on itself. Also on uptrends and relative. Long to AI 100 so business watch, and then with really here so daily as you into this to consider there's no trees that we can walk try to quickly today I'm sorry it's kind of type so 9 range 602 left flow and then that's going to be a something that hit this here move on never back to gap fill strong right now tech report and we're going to go to today is XT this is one of my favorite setups that I like, and I'm just going to go to 2 minutes. Just give me 1 second to make sure I can get to and this setups. We did have a lot of these in beginning of the meetings from last year and mid-year in itself. And usually with this 330 setup is you need a low float stock, and this qualifies for that one. There's only 3.29 million shares in the float, and I believe it was a little bit smaller before that as well. And as you can see here on the chart, and we're going to go back just to look, I'm sorry, and what's the key component here, 30 days, is volume is pretty much non-existent. Okay, so this is why I like to always keep an eye on these and look for some of these low float stocks here in itself, and especially if, let's say I missed that first move or first breakout for the day like we did in XTAI, is that again we have the elevated volume. Okay, we have a little bit of a news chirp, and you can see here we did break out from the 11 high from that was put in from the morning. As you can see in this volume peak right here. We finally broke out above that zone around like 12:30, and then we ran up and put in these highs right here. Okay, so that's super, super important here for this to take place. Also, on top of it, I'm going to add VWAP because I just want to show you how it taps VWAP, and also tracks some studies here. And what is here? So I'm going to zoom in at one, right? And we're starting sideways and we're holding. You can see it start to hold here, What happens is when we validation area things over, and it's and we get a breakdown from the range. And I get right into these zones, right? As you can see, and as you can see, turned over to the and you come back and this is right, and this is a look for pretty trades, usually a low float stock, churns all day, goes sideways, have some shorts, right, and this was so the setup and today need to cover this, see the to cover you have to buy the stock to cover, which creates artificial buy. And then you have traders like us who want to play the breakout that are also buying on top of that. And then you have the bots that are following all the volume playing that as well. So it's like you kind of like 3x the volume into this due to everyone, again, taking advantage of what's taking place here in this imbalance at this period of time. So this is super important as far as this breakout. And again, usually on the low floats, what I'll do is use the 2-minute trail. For the large caps, I usually use the 5-minute trail for the larger cap stocks. But also you can use whatever time frame.
long.
Recording in progress.
The closer in time, you're going to want to go a little bit further out if you're selling to make sure that that rate of decay doesn't happen too quickly. So if theta decay was a graph in the way that we look at linear decay, going from 30 days in, you're going to really start to see it amplify. So it might go like this, and then as it gets closer to expiration, it just keeps falling off more and more. So say this is 30 days here, and this is 15 days. Well, here you're going to have that still, hopefully, if you have a good entry, you're going to be able to still benefit from that. But if you're saying 7 days and 15 days, sometimes you'll see this will decrease in value because you're buying your longs at a higher price than what your shorts will decay at, and that's how you lose money under the 10. And we'll go through that in a little bit. And if it's way over your heads, this is something you guys can watch again. At the end of this, I'm going to put ways that you can contact me directly if you guys have any questions or anything like that. And again, in a couple weeks, I'm going to, what is my run to go again on Inside Access, I'm going to go through this a little bit more for you as well. So what are the advantages of calendar spreads? Well, it's a debit trade. So being that it's a debit trade or even a credit trade sometimes, but you'll never get it on a calendar spread, but you have limited risk in most option spreads. All option spreads, I should say. So what you paid for it is exactly what your maximum risk is. Are you ever really going to let it get to the maximum amount? No. If you do, you're not going to have a very long career in options. Every single trade plan should have a target profit, target loss, based on what you are looking to accomplish on that trade. The profit potential is capped a little bit, but it also generates profits from time and volatility. And we'll go through I'll show you on the volatility skews, looking at horizontal skews in a little bit, how exactly that happens. This trade does have flexibility, especially the way that you can set it up in a lot of different ways. I love time spreads. It's what I trade a lot of here on the desk, especially when you find a really good opportunity. I have a couple that are very systematic. But there are certain opportunities that you can find, especially on the equity side of it, that might be more beneficial than others. And flexibility. The strategy can be adjusted on the market conditionings based by altering the strike prices. You can set these up any which way you want. If you have a bias to the bull side, bias to the bear side, I like to position them slightly neutral. I usually will either, depending on what it is, maybe be a little bit delta positive because you have Vega working in your favor, but it all depends on the trade plan, how you have it set up on your end. Risks and drawbacks. So in high volatility, like we just talked about, and I mean high volatility, I'm not particularly talking about the VIX. One way of looking at it may be like VIX 9 versus VIX. If VIX 9 is lower than VIX, a lot of times that's not going to be really good edge if you're selling near-term calendars, meaning a 930 calendar, because you'd be buying an option in a long month that is higher than what you're selling. That's what we call contango. Backwardation is when we have a volatility in a shorter dated option that's going to be higher than the long dated option, and that is where you get a little bit more edge in calendar trading. Limited profit potential because you are buying those shorts against those longs a little bit. It does cap your profit potential, but it also then limits your overall risk. If you are trading in equities, something you really have to be careful of is early assignment. And this is part of why you sell them iron, meaning that you're going in the call and the put side out of the money. So you won't get assigned at all on those as you at least start the trade. And then as the trade's working, you're gonna have to monitor where those shorts are, because if the market or whatever equity you're trading is going past those short strikes, you're going to possibly be assigned. Trade management, we'll go through in a little bit. Monitoring the underlying asset. You can use it by obviously prices. If you get a crazy bull run, you're gonna have to adjust, even if the Greeks don't look proper or look all in line. Adjust it based on price moves. You're gonna have to adjust it also based on movement in the Greeks and the overall structure, and then exiting the trade
when the underlying asset moves past an expected range or you're at your max loss, one of the two. Entry volatility. Kind of went over it a second ago. We would ideally like backwardation, and not just backwardation for the sake of being in backwardation. We'd like backwardation in the fact that we want to see on a graph that we are seeing that bottoming of the long volatility if we can. So there's actually a scanner tool I did that I've been working on for like a while now. Turns out didn't work. Learned a lot from it, but the reason it didn't work is because it was scanning for backwardation. But what was happening is scanning for backwardation, and both the longs and the shorts were at the peak end of their volatility. So I was buying that long volatility really high, even though the short was still higher. That adverse movement against the long is what killed the trades. Selecting the appropriate option strikes. This can be very systematic. This can be very discretionary. You as a trader are going to be able to make that decision for you and how you want your bias to be. So you can consider expected volatility, time decay, price range of the asset. There's a lot of different ways that you can structure this. Me, myself, I'm a little more systematic than discretionary. So I like to keep the structure as a whole and then find ways to work that structure and that trade plan within the market. There's people that are very discretionary that say, hey, this is a really great entry. This is within this assets within A and B, and this is what I'm going to play to. So you can really pick how you want to do it within the market. Selecting expirations. Now, this is honestly the hardest part of calendar trading. You want to find something that is far enough in time that you're not going to see a ton of depreciation of the value of the price, while also picking something that's close enough in time that theta is going to more rapidly come out of it. And that's why these things, they kind of call them like theta bombs, is you're going to sit there and you're going to see a lot of theta in them because you're going to see that short, especially in backwardation, really pumped up. And if that volatility comes out, because volatility is mean reverting, you're going to be able to then take advantage of that in that actual trade. And sometimes you can make money and you could even be outside of your tent if volatility really works in your favor. Doesn't happen often, but it can. Monitoring the position and adjusting a double calendar. Monitoring the price of the underlying asset goes through the trade. Price and Greeks, I should be in there. I will edit that when I'm done. You're also going to analyze the market conditions, the impact of relative market conditions and the change in volatility, meaning that you're going to be watching the volatility in the long and the short each day, seeing that change, what happens. I actually had one today where you started to see a volatility crush because these tents are not like a butterfly trade. They move. So an iron condor is going to be an iron condor. It's all in the same expiration. A calendar tent can expand and contract as market conditions change. Adjusting and exiting, make the appropriate adjustments to the position, including rolling over options and closing the spread altogether. Profit and loss. Very trade plan specific. I tell everybody all the time, you guys, it's Dr. Steenbacher said it the best is for my type of trading is I get creative in my trade planning. I don't get creative in my execution. And what that means is that before I even enter a trade, I know how I'm going to react to it. I have if-then statements written. I have a full detailed plan of what's going to happen, win or lose. And that way I can get a little bit more consistent edge. And when I'm in the market, I'm not going to be panicking at all. I'm going to stay calm because I know I have that plan behind what I'm doing. Dynamic expirations, they kind of like what I explained earlier, and I'll show you in a little bit. You'll see the volatility coming in and out of these just in the expiration graph alone. If you just watch that alone, many times you'll get to see how the calendars and how those options are reacting. So today, my max profit on one of my very short-term ones may have been theoretically, because it's you'll never get all this, like say 40%. Well, by the time I exited, that max profit was down to 28. Well, that happens because my longs are decaying, and thankfully my shorts decayed more quickly, and I saw volatility coming out of that, so I ended up exiting at my target. But you have to monitor that, because there's a lot of times where that tent can just completely get collapsed, and if that happens, you're best off just exiting the trade and moving on to the next one. Back testing and sizing, I am the largest component of back testing. If anybody's been on a call from me before, I will back test. I back test every single day. I back test the trades that I have just done the prior day. I've back tested. If I'm doing an automated back testing strategy, I will go through an entire year at least. If it's a daily one, if it's like a weekly trade, I'll go back 3 to 5 years to prove that I can do it manually. That's the way to get the mental reps. That's the way to see how the trade's performing over time. The only true way to be able to manage it properly is going to be by back testing. Once you've back tested, you start small. I'm not going to say just only trade one lots, because a lot of times if you're only trading a one lot, you got a larger account, you're not going to watch it. The trade plan is going to falter. It should be enough capital once you start trading it to keep you engaged, but not going to hurt the account if you make a mistake. Key takeaways here. Double calendar spreads are neutral option strategies that can be viable options for traders looking to generate profits. It's important to understand the strategy's advantages, risks, and management techniques to optimize the potentials and mitigate losses. And we'll go through that here in a minute, kind of what I look for when I'm looking at it. And Preeti, thank you. We will look at NVIDIA, or Netflix, I'm sorry, on that as well, and we can kind of go through that on the call here. I'll put this slide up again at the end. If you guys need anything, my email is on the right-hand side. The Discord, you guys can message me in Discord. Try to send me direct messages or tag me if you're going to, because I don't look at it consistently throughout the day, but I do check Discord like every other day. Email is probably the absolute best way if you're looking at it. Can you briefly explain what the best and worst case scenarios would be for entry of a double calendar? High volatility for the shorts is good, but the IV drop after. If you enter in a big move, yes. Okay, so Darius, yeah, well, let's get into that real quick. All right. Let's look at Netflix. So this is, and I'm sure Thinkorswim, Tasty Trade, a lot of those other ones have similar products to this. This is Volatility Lab by Interactive Brokers. So what this is going to show us is the at-the-money options, how it's changed over time. So let's just go, yeah, that's a good one. End of the month. Go down to February. Go out to March. All right. So, obviously, I mean, I honestly, this is actually pretty bad because I mainly only trade SPX and RUT. I'm assuming Netflix had earnings. Is that right? Yes. Okay. That makes sense. The reason I'm saying why it makes such sense is because if you're looking at these SKUs, this is why a very good, why trading up to earnings on a calendar is a really bad idea. Because look at what's happening here. So yes, this looks great. Like your SKU looks great, right? Like you're buying here, you're selling here. Well, what's happening is this short option is not decaying. Volatility is actually making this the short increase that you're selling. So right before earnings, yeah, this SKU looks amazing, right? So you're here and here. But one thing that the options market is a very tough thing pricing in is earnings, because going to react. A lot of these here, Let's see. Let's go back a few days. Close up a few programs here and maybe make this move a little bit faster. Come on, load up. Sorry about this. Option net moves really slow on when I'm on Zoom for some reason. Could be bandwidth or let me close out my Silex. There we go. Okay. All right, so this is kind of what I was getting at here. So say we went to on Tuesday, we wanted to trade this on earnings. Let's go to say a 20 delta. Let's go out to the next week. So as you can see here, our implied volatility on this calendar on these specific ones here, 121. 56. So we are in some big backwardation. And I'm going to, you'll see in a little bit, we'll keep it somewhat the same. All right. So this risk graph looks great, right? Now, watch what I mean by being dynamic here. So, I mean, our max profit that we can make, saying 544%, it's pretty huge. And I have no idea how this trade is actually going to work out, full disclosure. Let's just go to end of day. All right, end of day, we're up a little bit of money. Let's go to yesterday. It's not going to give me, oh, there we go. So earnings happened, price outran the 10. But look at what happened to volatility. 500% down to 259%. The reason being is that you had those longs really come out. So what can happen to a trade over earnings? Exactly what just happened here. We have this dark blue line is 1 standard deviation move. This lighter gray line is a 2 standard deviation move. We are over a 3 standard deviation move in Netflix within a day. That is the main reason. As delta neutral traders, we want volatility is great. We love to sell volatility, but we don't like to sell volatility over major catalyst events, because what happens is the market can have these crazy outsized moves and you can take an outsized loss. Now, mind you, this could have been a really nice winner. If you're trading one lots, I mean, $300, it is what it is. You took a shot, but it's if you start trading on larger size, I mean, no one likes to take a 40% loss on a trade. So that would be an example of not looking at it in like not a very good skew. And actually, let me see. I think I posted it in our options strat trading team. Let me pull up my that real fast, and I'll show you what I actually am looking for in a skew when I'm entering. And many of you are thinking, I mean, if it's me, particularly like this trade obviously didn't have a ton of edge. You could always just invert it, right? You could just take the opposite side of it and it probably would have been a really big winner. Similar like iron condors, if you're expecting a really big move, instead of selling an iron condor, just buy an iron condor and go the other way. Give me 1 second. I'm just scrolling up to that screenshot. All right, so this is actually, usually I enter this trade, it would have been when CPI was happening. But I entered on the January 31st expiration SPX, and I was selling that and buying the February 14th. Well, what happened after that CPI is you had exactly what we talked about in the NVIDIA one. The short really came down, but the long came down just as much. So what happens when you're buying a long, you're buying more money. It's costing you more money. So even if it has a disproportionate percentage drop, it can significantly affect the trade negatively. Well, the next day, we're looking at it, I'm like, okay, well, now is a decent entry for me. You can kind of see in this program where these volatility chains live, where it's been, what the lowest of the low is on it, going further out in time. And as you get closer to expiration, you've seen some more chop. So for me, I waited for the next day and I wanted to buy that long, and I bought that at 13.2 and I sold at 13.7. So what can happen here? Well, since going closer to expiration, you very rarely see these go below what their average is. Further out in time, you're going to see it possibly lower. But for me in SPX, this is a really good buying opportunity for a long. Selling for a short, yeah, they're still getting closer to expiration. You're going to see theta decay come out. So I'm still buying the calendar and backwardation. But from an actual volatility standpoint, and this was my issue with my scanner, which ended up not working, was I was looking for this in the scanner because you're seeing adverse rises in volatility. I wasn't looking for the long bottoming out and still being in backwardation. And that's my next one that I'm going to be looking for, is I'm going to be looking for finding ways that I can look for this type of setup more and more. So when you see something like this, it's a really, really good opportunity from a buy side to be able to go long volatility. Because the reason I say that is because this has stayed at this level and for quite some time, we're still not going to see a huge potential drop. Where here, if this comes down, we're going to start to see an even bigger one. And that's going to be your theta coming out, where your volatility on your shorts is going to start coming out more. And if we increase, say we get a big burst in volatility, granted, you're going to see your front expiration generally spike more than your long, but it's all about the pricing. And if the pricing comes through the way it should, you may have a 7% influx on your shorts and a 5% influx on your longs. You're still going to be in the win because those longs are costing you so much more money. Let's go live and I can kind of show you. SPX is a really good way to show you guys all that. Yes, the upside, Patricia, does look really, really exciting. Some people do it with a lot of success. Me personally, I won't do it over earnings. It's not something I like to do. I personally really like to stay in the indexes. And the reason why I like to stay in the indexes is, one, they're cash settled. Two, when is the last time you saw a 3.5 standard deviation move in an index? Even on CPI and all that, I think we got like a 1 standard deviation, like 1.5, whatever. It's not going to kill you too much. We'll go 4 days. We're going to go at the money on the puts. So 4-day put is at $19. Well, let's go out 2 weeks. You're at 62. So as you can see, from a percentage basis point, stand view, if you have 5% of 51 versus 7% of 19, if you still get that volatility rise, that's going to help you in the long run because this trade as a whole is going to increase. And we can even do the same. Say we want to go, we'll just do just a regular standard at the money calendar. Probably like to go, I'm doing 14 days. I'd probably go out to around 30. All right. So this would be a regular standard calendar trade. You know what? Let's make a double calendar just while we got time for a second. So remember what I said, we go out of the money. Let's just say we're going to go to 30 delta. We're at 60-40. All right. A little more positive delta than I like to be. There's a couple ways you can cut this. You can just diagonalize your upper one. It's not enough there. You might want to move the upper calendar down. That's going to help cut that as well. But this trade as a whole, double calendars are going to have that smile on there. And what you'll see is as we do this volatility adjust here, there we go. Volatility goes up, our tent rises. Volatility goes down, our tent shrinks. A lot of what I meant by finding a good entry, and you can lose money being in the being under the 10. Myron, the shorts are right here. They're the same as the longs at February 6th, going 14 days. But a lot of times you're not going to see full 1% jumps in volatility. So say we go and we make this a little bit closer. Still a little bit more positive delta than I like to be at entry, especially on a one lot. But let's say we needed to adjust this at all. You can do it in multiple different ways. You can adjust these things just by altering your longs and your shorts. Say you get a big adverse move against you. Well, what part of the trade is really doing well? Your longs. So you can take that money, roll that in, and now you're cutting deltas, increasing your decreasing your downside risk. A lot of times when I'm managing trades, and this is actually a good example, this is pretty high gamma for a one lot. On here, we have T plus 5 and T plus 10, meaning within theoretical, if the trade or the market doesn't move, this is what's going to happen within 5 days. This is what's going to happen within 10 days. That is completely theoretical, especially when it comes to calendars, because this goes off of Black-Scholes models, which is a lot of, doesn't really factor in the Vega properly 100%. But really, it's knowing on these trades where your pain points are, what's going to happen. I said a lot of times I don't mind being positive delta at entry. Well, what happens in a down move for the most part? Like what happens to volatility as the market moves down? Exactly, it goes up. So we're positive Vega. So every time that vol goes up, we're going to see this tent increase and it's going to bring profit in. So that's why I don't mind being a little bit more positive delta at entry, because if the market moves down, it's going to help the trade. If it moves up, that volatility number is actually, that Vega is going to hurt the trade. Calendar at the money with the second calendar, 30 delta. No, they're both at about 30 delta. Darius 1430 on this. This is not a trade I do. I'm just this is purely demonstrational. For demonstration only. But yeah, that is why the volatility aspect of calendars is so important. You can get caught and it looks really great. And that's the biggest thing if you get one takeaway from this, it's that the risk graphs are dynamic. You can get stuck in this, you can get stuck in this. If you're selling an option after earnings, there's a lot of times, as you can see, this long stayed pretty steady. This short rose all the way up to earnings. You're not going to make any money in that trade. You're having to have zero volatility is going to affect you so poorly going into that earnings event that you're not going to be able to make any money. There are people I know a lot of times that do a trade called the double eagle. They'll find out, like they'll have some sort of scanner, news tool, something like that. They find out when that earnings event is going to happen and they sell the option expiration before the event and then they buy just after the event. Why? Anybody explain why that trade would work? Or has the potential of working? Yeah. Dennis, nobody cares about that option chain now before the event. It doesn't matter. Everyone's going to be focusing on earnings and earnings only. So that long is going to stay really stable that you're buying. And what's going to happen to that short that you sold before the event is just going to go down. And you're going to be going, and exactly what you want to have happen is a long stay stable to rising and a short going down and decreasing. That's yeah, but Michael, you'd be out before the event. Still doesn't matter to me. I will not personally, once the earnings happen, you see the initial market move, and that's what can really kill you on these things. It's really any trade going into earnings. But say we just did a normal, say let's do iron condor. We'll go 20 delta. Say 30 just because I don't want to scroll all the way down the options chain. Now this trade here, this is a static 10. This will not move because you are all in the same options chain. Volatility now you went from positive Vega to negative Vega, and I did a presentation on iron condors. If anybody's interested, you can go back in the archives and take a look at it. But now volatility coming out of the market helps you more. So again, is it something to do over earnings? I personally do not trade delta neutral trades over earnings. Unless you have some really if you had a big bias and saying, hey, I think Netflix is going to go higher, they're going to blow it out of the water. Well, if you want to do that and you want to just put on a put credit spread, take advantage of the upside and then get out on the downside. Delta neutral on earnings, you can get hit in either way, and it can really hurt you. You do get the vol crush. You have volatility on a Vega, negative Vega trade working in your favor, but you still the potential of a price, and Seth says it a ton in the Options Foundation call. The potential of price moving way adversely against you is so much higher going into a catalyst event. We just want to hit singles and doubles. That's what I'm looking to do every day. Just hit singles and doubles, singles and doubles. These trades are generally not going to get you that crazy asymmetry, but they're going to give you consistency. And that's kind of the goal of this. What if the IV of the short drops a lot and the IV of the long does not drop a lot? By choosing so much lower IV on buy with 30 days. Gavin, with earnings, it's not even so much the volatility, it's the price movement. So we'll just use this iron condor example here. NVIDIA moved, that was on expiration date, moved 3 standard deviations, meaning that from an SPX standpoint, that would mean SPX would have to move to 6,600 by the time by the time expiration happened. in this current example. That's part of why I like to trade indexes. They don't move as rapidly. You do get those big, crazy knee-jerk moves, but you really have to just watch more the price movement of earnings in a neutral trade because you only make money in between the tent when it comes to expiration or even outside of expiration. You might be able to go further out on Netflix and go in 30 days. I would, that'd be an interesting test. I've never done it. Because what you're seeing, and let me see if I have. So going February to March, it's a much better entry. Here to here, you're seeing these shorts really come out, and now you're seeing the longs go and that other long hold longer. That's a good, yeah, that's actually quite possibly a good trade. Yeah, Gavin, it's definitely something you could test out. I've never tested it, but that's definitely something you could do. With the put credit spread, do you have to wait till close on expiration day or just take the gains? It's trade plan specific, and it's completely. I mean, if you're on a put credit spread and you have a decent amount, like say it's one day and you're right on the call, there's probably not much extrinsic value in that. If you're at like 65% of your total profit in a day, 75% of your target profit, you could either wait to see what happens and let more of that theta work in your favor because you're getting so far out of the money, or close it and move on to another trade. That's really trader specific on how you'd want to do that. But no, Gavin, that's a great idea. That's something that might work. I'm actually I'm writing that down to look more into that. But again, it's that earnings are great, but you do have to just watch for that price movement against you. All right, guys, that's it for today. Again, if you guys need anything, shoot me an email, nsalvatore@smbcap.com. And if you need me on Discord, shoot me a message. If you guys want to learn anything, or if there's something that you have specifically done in the market that you're like, hey, can we review this? Shoot me a message. I love going over your guys' trades on here, giving input, trade plan specific stuff, all of that, so we can all learn together on all of that. All right. Have a great week, everybody. Next week, Seth, and I'll be on in 2 weeks.
doing some investigation today, but I guess.
twisted a Bible?
Enrique. Are you there?
shit though. It's really beautiful. I'm in from 45. Oh, shit, dude. Your soul summon to 60. To the resistance of 5. Now that counts, any other word, like persistent. So more. Oh wait, share. 140.07 got LinkedIn dropped. Apple still buying, yeah, right? Yeah. Yeah, it's getting eaten up. Says 1.3. Now it's getting eaten up. Closing some of Apple's. Oh shit, I'm on Google, bro. It was Google there? Nah. You threw it on the buy? Yeah. That would have been a good buy, though. I mean, I'm long from like 196, which was like, so I added there, that break of 97.50s. You're open one share. Did I just hear that? Yeah, I'm long, yeah, bro, I long one share. I mean, no. Actually, 20. Just take the bid, dude. Just get the fuck out. No, I'm still gonna go average. Just gonna wait, maybe. Nvidia.
PXN, dude.
You're still on Nvidia.
Yeah. Oh shit, bro. Didn't get totally even.
Also, that can also go into the into the after hours.
It's kind of like.
Oh damn! Look at those. Yeah. I hit out and it went out like 30 cents. Did it help you out today? Is it worth the write up?
Everything besides IBIT, dude. I fucking nailed it.
Yo, I saw you. I was looking at your trade at
Everything besides IBIT, bro. Should fuck me
this
up.
one. That was you? Oh, no.
Who the fuck is this?
Cams.
Cam Crosby, the guy who sits back there.
Yeah.
Nice.
And then I was looking at yours. That was nice, bro.
That was only like a few. That was like 10 shares, right?
I don't know. It says S1, so one share.
Yeah, each one of those is one share.
Okay.
I took it long.
Yeah, and then I think I got stopped right there, and then I started again here, and then
You stopped out.
no,
Oh,
I
you added to short it.
and then covered right here.
Nice.
That was a crazy trade.
That was, dude. I fucking put in 100 shares, and I'm like, this better fucking work, or else I'm screwed. And as soon as it hit, I think it was like 24 or 23. My target was 25. But I'm like, I'm not even gonna play this stupid. I just hit out of it.
I saw it. I'm not touching that.
Oh no, I don't blame you at all. This one, it looks so clean in hindsight, but like in real time,
I
it's
saw
very
it. It
scary
came
to
up with
touch.
one of my scanners, like around here. And then in my head, I'm like, well, how
I
the
know
fuck am
I know good traders who stopped out right here, and they like lost their daily stop.
Damn.
And that's like that's what you can do, right?
This is the best one, bro. Look at this.
Who did this?
My boy.
Oh my god, that's a fucking killer.
That's it, bro. Go with that. Like, that's like, I don't know if you go back in the tape and you have it record of it.
I'll be honest, I like my trade a lot better, but he put it on the sides.
Yeah, it was just after that.
My
stuff,
trades were like here and here, and then here and here.
The tape was.
But he tried it before though.
Dude, the tape was fucking choppy. It wasn't clean.
He still made money on it, right?
Hell fucking yeah.
Fucking killer. He came today with the blueprint. Please let us know if you have any questions.
My brain is fried.
So, it was like the stock market, right? That means like they still have to review it. Hey, you didn't mention Bitcoin. It's just crypto. Yeah. It's just crypto. It's super sus. It makes, you know, the extension of that. He said it's just he's gonna make a strategic Bitcoin reserve through the gains that we've gotten through legally seized crypto. So that just
Yo, this tree was sick.
so congratulations. You're coming up with all the Bitcoin that you stole.
Is that you?
Look at that shit was clean, bro. Yeah. And the 5 looks clean, bro.
Holy shit. I'm tired. I'm a meeting today. Elections, it looks like.
No, that was earlier.
thingy?
Yeah, I shouldn't fuck with that.
I hit it with small size. I mean, like for the option.
He kept on like, what was it? It was like 5907, 5907. I'm like, bro, can't go below 5907. Like that. I put in, I got in at like 16, and it just went down immediately. It went to like, sprayed to like 25, 60, and then from 60, it went down to like 58, 80. And I tried it 3 times, like.
Well, dude, this is the third time I've seen her. Not only
Oh, okay.
No. She better not hit me. She doesn't green. So she has a green palms.
Maybe. What's tomorrow? Friday? Hell yeah.
Well, no, 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 I won't. I know she won't pick out or she's like. Are you gonna get pretty fast? Oh yeah. But I just would have put like a flasher.
Oh, which one?
Yeah, it should be a 0. Yeah, it's a poker this weekend. Or basketball too. I got Charlie for so bad on Saturday. You have an indoor court? Yeah, YMCA. I don't know if they do guest passes. It's 36 a month. Oh yeah, we go to other Brian's place. He has an indoor in his apartment. So we could go there too. Hey, what's up? You don't want to bet with me basketball. I'll take all your money. Not you, Casey. You don't see my arms. See the dumbbell in here. No one does this. Just you and me. Okay, yeah, but I will say, his right forearm is probably like 80% bigger than Marshall. It's like left. I'm a left. What? That's crazy. That's actually crazy. I've tried it like once or twice. I'm like, nah, this ain't it.
I see. Yeah. Yeah.
Maybe ours. I'll see you tomorrow.
Have a good one.